one accountant. Just to give a little background, I'm a tax controversy attorney, which means I represent individuals with disputes or kind of disclosure issues with the IRS or other people, and I kind of got involved with crypto when I spread the news about the IRS summons to Coinbase, because I just knew that was going to be a big one. John has always helped me whenever I have different cases. He's an excellent accountant, and so he and I, for the past year and a half or so, have been kind of figuring out, kind of in practical terms, dealing with the issues that you guys all, or the questions you have. Okay. So today, what I'm going to do is just kind of try and go through. And I took a presentation that I did last week in DC for tax attorneys and try to turn it now, flip it, and so I can do it for individuals, right? So if I get a little tax nerdy on you, I'll try and blow through that. I know John's going to speak a little bit today, and we'll get into kind of answering some of the practical questions and kind of what you guys can do to make things easier going forward. And I'll give you a few suggestions that I might have. That's pretty much it. So just kind of as a starting point, I'm just going to talk about what the IRS has already talked about as far as crypto. Areas where it's wide open right now, where we don't have any guidance from the IRS or any other agency, any federal agency. John's going to talk a lot about accounting methodology and how he does it, and I think he'll be able to kind of explain to you guys what you should do to make things a little bit more simple as you move forward. And then the last two I can talk a little or a lot about, but it's just what is IRS enforcement, what is an audit, how does it actually work, what should you be worried about if you have past year issues, what should you not be worried about, and when you file your return, should you be worried about things. For the most part, I wouldn't say there's a whole lot to be concerned about right to begin with, but I'm going to talk about that. So if you guys want to figure out what guidance there is, it's this right here. And so if you guys Google IRS Notice 2014-21, that's it. It's a 3-page FAQ, and it goes over just some of the basics of taxation for crypto, okay? So first and foremost, the most important thing it does, it says crypto is property. So that means for investors, capital gains rules are going to apply for most of it. Okay, short-term, long-term capital gains, like stocks or other capital assets. Okay, so that means for bookkeeping, you have to figure out when you bought something, what you paid for it, when you sold it, and what the net gain was. Moving through, anybody mine here? I didn't hear anybody mining. Okay, simply put, mining is irregular income. Anybody paying anybody with crypto?
I paid my contractor.
Then you have to file a 1099 or a W-2 or those kind of third-party things. So I won't spend a lot of time on that stuff because that's probably not too relevant today. So where is there no guidance from the IRS? First, accounting methods. First in, first out. Last in, first out. Specific ID, average cost. There's really nothing there from the IRS saying what is acceptable or not. Not a lot of guidance on what it would consider kind of good tracking and reporting of these issues, but we can probably figure that out. Wash sales, taxation of forks, Bitcoin Cash. When you get that, is that income to you? Airdrops, was it stellar lumens? Is that income to you? No guidance yet. 1031 like-kind exchanges. This is the #1 call I get. And that basically means if you trade, you altcoin trade, you get to defer the tax treatment. All right, that's a big open question. Last, and probably the one that if I said that everybody in this room owns crypto, if you have a Binance account or you get a BTCE account, right, you have certain offshore disclosure, offshore reporting requirements. All right, and I'll talk a little bit about those, but that's probably the biggest thing that actually can get you hot water of all the things we're going to talk about. Last thing on there is the de facto partnership issues. If your friend gave you $5,000 or $500 to buy a little bit of crypto for him or her, you're kind of actually a partnership for federal income tax purposes, and now in your account, you've been trading for that person. So these are all the kind of things that when John and I start talking to people, we're thinking about. So this is probably the most important slide here for what I'm hearing in this group, right? So basically, you have to calculate your gains and losses. Because altcoin trading is not going to be often, and John can talk more about this, it's not going to show the fair market value when you trade your Ethereum for Litecoin, let's say, right? It's not going to give you that US dollar gain or loss that you can do it easily. You have to essentially use fair market value, kind of somehow basically impute or incorporate fair market value to determine that. So you can say to the tax man, I had a gain or loss in of US dollars from this trade, okay? When you don't have that information, one of the biggest issues we see is that people don't have they don't have perfect records, right? So you have to use historical data, and really the only guidance here, and that's from that notice I talked about, is consistently applying a reasonable manner, right? And that's something that maybe you can do if you use some of the online platforms to help you do that, as far as cointracking.info or bitcoin.tax. Another one that I know of is coin taxes. I think it's .com. All help you with that. I'm not going to get into what John's going to talk about here, but that's the raw data is kind of imperfect and makes the process of going through and amending your returns somewhat difficult. So talking through, first of all, let's talk about first in, first out, averaging, specific ID. So I get a lot of people ask about last in, first out, first in, first out. My personal opinion is that first in, first out is what's standard. So if I bought the first Bitcoin I ever bought, and I buy 20 more down the line, and then the first one I sell, it's going to connect to that very first one, in simple terms. Okay, so the oldest Bitcoin that's how the books treat it. That's not always the best for everybody, right? You'd much rather have last in, first out for the most part. My personal opinion, first in, first out is what would give you the least chance of an audit. I think you could have a higher elevated chance of an exam if you do not do first in, first out. Some other possibilities here are specific identification, where I can actually show that I segregated my oldest crypto. And let's say for example, I opened up a Coinbase account. I went to my Coinbase and bought Ethereum. Then in a different account, my Gemini account, I went and bought Ethereum and then sold that Ethereum a day later. Because those are kind of separated, and I can actually show by the kind of the hash or the related public hash on it, that I sold that more recent purchased one, then I could make that report that on my return. One of the big issues right now, and I think probably kind of addresses more the future part of what investors are dealing with, is will the exchanges start issuing 1099Bs, which is what you get from Morgan Stanley or E-Trade or any of those, right? That would probably make life a lot easier. My guess is it's not going to be anytime particularly soon, just because the tracking on this is really, really complicated, especially because the nature of being able to kind of transfer in between wallets. Okay.
How would you, so like the thing is, how would they issue that? Like if you transfer, let's say I go to Coinbase and I buy $10,000 worth of Bitcoin, right? Then I transfer that Bitcoin over to Bittrex, sell it there, right? So they have no indication of the buy, right? So how do they? They're just sending a 1099 that says, hey, this is the profit from the Bitcoin sale.
Yeah, well, I'd answer two ways. So,
Okay.
John, if you want to help, because you can probably answer that a little bit. But right now, my understanding is that what Coinbase is doing is issuing a 1099K, which is actually what a merchant and credit card company would issue. And it's reporting kind of gross transactions and then the gross amount. And that's whether, if you had $10,000 of Bitcoin, if you transfer that out, it would say $10,000. If you transferred it back in, now $20,000. If you sold it for $10,000, it would say $30,000. And so it's basically aggregating all those transactions regardless of the activity.
Okay.
And that's one of the big, I get a lot of 1099K calls, right? So that would lead to John talking about books and how he kind of approaches that. So, because really your question is, how do I have records to show that I didn't have all of those gains?
Yeah.
Right? And I can
Like,
offset my basis.
I'm constantly moving money between exchanges, cold wallets, right? You know, and it's all my Bitcoin. It never touches anything. It goes to my exchange, my cold wallet, maybe to another exchange, maybe back to a cold wallet, vice versa. There's a lot of transactions that are not sells or buys. They're just movement. And I'm trying to understand how the implications of the tax implications there. Because, I mean, what the IRS, the guidance I've understood that they're saying is like anytime you dispose of crypto, right, no matter what amount, right, that's a tax. So if I go to a coffee shop and I buy crypto, right, that's a taxable event.
Yeah, sorry, let me answer that. And
Sorry.
No, that's a good point. I kind of skipped over that quickly.
Okay.
If I sell it for US dollars, fiat, that's a taxable event. If I exchange it for goods or services, taxable event. If I exchange it for another altcoin, taxable event. If I transfer it to a different wallet, that is not a taxable event. Okay, so moving it around, between
Your
different
own
wallets or
wallet,
exchanges.
right? Your own
wallet, yes.
Right.
Yeah, it can't, obviously, if you transfer to
Right,
someone else,
right.
that would probably be either a gift or some sort of
It's a gift,
transaction.
yeah.
But I'll let John step in here.
John, I can answer a little bit. So our format accounts for all of that. So you can transfer all day back and forth between wallets and exchanges, and our format is not going to miscalculate your basis. If the question is, how does, let's say, Bittrex know how much I paid for a Bitcoin that I bought on Coinbase? The answer is they don't.
Yeah.
Now, there are instances in which a Schwab account will issue you a 1099-B and it'll have nothing for the basis. And there's a box you can check on your tax return that says, this is an incorrectly reported basis. And then it's to the taxpayer's responsibility to then report the basis and, in as far as is necessary, prove it. An example, I had a tax client when I did tax returns where she had inherited IBM stocks from her grandmother. And so she had taken possession of the IBM stocks and then transferred them into her Schwab account, which had never seen those stocks before. And they didn't know what the basis was because it's an inherited basis. So then when she sold them, Schwab just put a zero on her basis. And then it was up to me to look at her grandmother's old tax returns and the old purchases and trace it back just like a tax guy. And then we reported it, put a letter into the tax return, and then showed the old purchases that the grandmother had made.
But why
as
do you have
evidence.
to do that? Because if you inherit a stock, the step up kicks in. So if she bought it at $5, died when it was at $100, your granddaughter got it, so the cost basis is $100.
Yeah, so I don't remember the details of what we had to do, but I do remember that there was a big old zero on the Schwab account, and then we had to go and rebuild her basis. So,
Okay.
now with the cryptocurrency, insofar as the question goes, I buy a Bitcoin on Coinbase, transfer it over to Bittrex and sell it, does Bittrex send me a 1099? Possibly. Will it be incorrect? Yes. And then it's either to you or to hire a professional to rebuild the record such that you have the appropriate basis.
Yeah, and I think what I add on here is that problem that we're talking about, right, and that's a good example of this that John used and pointed out, is that often in all different types of kind of transactions that are reported, the information's incomplete, right? And so it's not unique to crypto. These are issues that are kind of unique to a lot of different people and a lot of different types of financial transactions, right? I mean, if you sell your house, right, you'll get a 1099-S for the gross amount of the sale, but you're not going to report the entire amount as, taxable income. And typically those issues are not going to be audited, right? So kind of the same thing applies here, and it kind of goes back to the reasonable method that I always talk. Because people call us, and frankly, our services aren't exactly cheap, and they kind of balk a little bit sometimes. And I say, well, look, you have to figure out a reasonable way to do it. And I'll kind of tell them bitcoin.tax and to try different things, and they can go through. And people generally have a good enough recollection of their activity and what their holdings, what their holdings are, to be able to realize that yes, I can do this on my own. I can figure it out and get reasonably close, or I really need to hire some other professional to kind of help out with this. But these are all problems, and that's kind of the idea that we've kind of backed into crypto from other experiences that we have. All right, and I'll talk a little bit more about audits later and about kind of what a return looks like and how they kind of go through it. Just a couple. I'll do this pretty quickly here. Forks and airdrops. I think the really conservative view is that Bitcoin Cash or any other forks, that would be income at the time you receive it, and you have to do it at the fair market value. There's been a lot of arguments about this one specifically. Probably my personal view is I probably would not report it as income on the idea that whenever I purchase or obtain the Bitcoin, I had rights to all the future forks, right, by owning that, by virtue of owning that.
Wouldn't that be similar in this, a dividend paying stock?
I don't think it'd be a dividend. I think split's the other one I hear. If you were going to do some sort of split, now a split would be taxable. Now, from my perspective, I think the conservative view is if you don't have, if it's not a lot, just report it as income. You've established your acquisition date. You have a basis in that, and whenever you sell in the future, then who get an offset on a basis, right? For some of our clients who have, you know, have substantial amounts and they don't want to realize it as income right there, I do think it's a very open question, and this is one of those areas where I know in talking with people in the government, kind of saying clear guidance needs to be promulgated, because right now it's just not clear. I think airdrops probably more likely to be income, especially if you kind of went out and kind of took affirmative steps to receive whatever kind of stellar or whatever kind of similar airdrops. But I mean, again, this you can kind of see here as you're going through your ledgers and kind of trying to figure this stuff out. There are these little events that happen that you now have to segregate out and be prepared to kind of figure out how you're going to tax it. But something to kind of keep an eye on.
What would happen if, like, you know, you own Bitcoin Cash happens, but you never claim it, but like the IRS, but you have a right to it. But like, I mean, how do you prove that you didn't do something? That's impossible to do.
Yeah, that's a good question. So for example, I know that I own Bitcoin, one of the hard forks, and I think I had it, and I never claimed it or did anything. I just kind of was too lazy, didn't want to figure it out, right? Basically, without getting too nerdy on the tax stuff, in order for the IRS to determine that you have, to say that you have more income, right, to increase your income, they have to have some sort of reasonable methodology and kind of prove it. And that's kind of the exception usually with an audit.
Okay.
So in that case, you know, for example, the way they're going to figure out what you have very likely is going to be going through your account ledgers, right? Going through your Coinbase transaction ledger, or Gemini, or Binance, or whatnot. And if it's not showing up on there, could they make an argument? But, I mean...
Because I mean, I'm thinking you could get around this by buying Bitcoin, putting it on a hardware wallet. When it forks, you know, keep it now off net, so to speak.
Yeah.
Right? They can't prove you didn't do something, so you can just like keep it in the corner until you want to sell it, and then once you do that, you could pay taxes on it. But like, I don't know.
It's, yeah.
This just seems ridiculous to me. This whole situation.
Yeah, and so there are kind of a couple of responses. Yes, and right now, I mean, without clear guidance, it's really hard. But I mean, from my perspective, that's a lot. I mean, number one, partial compliance is a myth, right? Because thousands of people kind of contact me. What if I did this? What if I did that? I mean, the flip side of that coin would be when you sell that and then you say that I've had this for a certain amount of time, right? You're kind of acknowledging it wasn't reported, right? Also, if you're saying there's no basis, then the question is how did you get it, right? So that's kind of the yin and the yang, right? I mean, and a lot of these issues go year in, year out on the return. They kind of build on each other, right? And probably the most practical advice is, you know, as far as getting yourselves kind of set up now where everything is really locked in, and then keeping good records moving forward, right? But it's a good question. I know I was on a panel last week. The IRS has two units, one in LA, one in DC, that are crypto investigation units on the criminal side, right? And so one of the investigators on that panel was on the what they call the Marco Polo. It's basically the Silk Road for drug pirate robbers, right? Mm-hmm. And what he said is that they do have the ability to kind of go back and reverse engineer the blockchain. Now I don't know if that's true or not, but what I do know is the IRS doesn't have the resources to do that, right? So they're just looking for people to basically voluntarily comply. You know, my view is, you know, for people who, everybody in this room, or everybody's involved with investing in crypto, even if they didn't report past years, if they take reasonable efforts to go through, amend now, pay with, you know, reasonable records, I think it's very unlikely to ever get to a criminal stage. And I think I think it's unlikely to be audited civilly, right? And that's just looking backward. I think going forward, you really want to have good records, and I think, kind of like we were talking about this 1099K issue, I think people like that are going to be the ones who have some issues. All right, a couple little rules here, and just some people might find this kind of boring, but so to the extent that there are losses this year or any year from crypto, they're capped out at $3,000 maximum per year. You can carry them forward and use them in future years. Okay, but so for example, let's say last year you did some altcoin trading, and again, you only realize a taxable event if you trade. So a friend here bought in 2014, held in 15, 16, he had nothing to report on his tax return unless they were in a foreign account. In 17, let's say he starts selling and doing some altcoin trading and realizes gains. Okay, and let's say 18, we have a bad year and the market goes down, you sell on the way down, and you have a net loss of $25,000. you're only gonna be able to actually use 3,000 as an offset against other income. The other negative 22 will carry forward into future years, okay?
Personal, general, no loss allowed, what does that mean? First line?
Yeah, I mean, so this is how it was kind of termed in the presentation, but really $3,000 of the capital loss,
Okay.
all right?
Is there a cap to how many years?
Is there a cap on how many years?
3,000.
Carrying forward.
Well, you can use it as long as you have capital gains in future years, right?
If I'm not mistaken, it's either that or 20.
Or if you state that you're a professional, right, then these change.
Yeah, we can talk about, I was gonna kind of get into that here, but certainly, I mean, depending on the size of the lot, I guess if it got pretty big, then it might be something to look into, but honestly, I don't even know if it's 20 years or something else, because usually it's small loss, and then people carry forward and use it in subsequent years. Forks and mining, 475F. So this is kind of like for, I don't know if anybody in this room, I'm sure there's some that hold a lot. For people that hold a lot of crypto and really have a lot invested and have potential big gains or big losses, there's something called a Mark II market election. And if you are a professional trader, what that means is that you can, instead of realizing or figuring out what your gains and losses are each year, you basically realize what's the fair market value of your entire portfolio at the beginning of the year, what's at the end of the year. If you're up, you pay tax on what you're up. If you're down, you get a loss that you can write off. Okay, so if anybody here, let's say, does not have a day job and holds 8 figures of crypto, mark to market is something they can think about doing. Okay, or if you're trading continuously. I won't spend a lot of time on it right now, but that's something for people who trade hundreds of trades a day and have tremendous balances in it. Something worth considering. You have to make the election, I think, by the due date of the return each year. So for people who want to do it for this year, it might be April 15th this year.
Is there anything you need to do to qualify to be a full-time trader, or
There's,
you don't
yeah.
have to register with any? There's no SEC, nothing. You just up to you to declare yourself.
Yeah.
It's like starting with 20K and trading in like $10 million, that wouldn't qualify?
That probably would, right? And so, from my perspective, so there's not like a specific qualification that you have. What it is, it's kind of a facts and circumstances test, because it has some really good benefits. So people often want to be traders, and the IRS will challenge that. So that's the kind of thing you'd really want to talk with someone and figure out if you qualify. If you did, it definitely has some benefits, but if the market shoots up, like last year, if you were mark to market, I mean, you would have gotten killed. I mean, you would have, you know what I mean? If the market goes 20 times, all of a sudden you have tax on that 20 times gain, regardless of whether you sold or not. Like-kind exchanges, is this something people know anything about or read anything about? All right.
No, I'm curious.
The answer is no, apparently.
So first of all, I will tell you that, I often get calls about this, and it's phrased to me in the fact that Congress doesn't like cryptocurrency, and they changed this rule to kind of prohibit cryptocurrency. I don't think that's really accurate. It was how it was portrayed in the kind of the crypto online in the crypto space. The reality is like-kind exchange has basically always been used for real estate and a couple other different types of property, business property. The rule is an exception to the rule, which is that one property traded for another is a taxable event, right? And this gives an exception to that rule. Within the like-kind language, it says securities, bonds, financial instruments, and other similar things are excluded from like-kind treatment. So I think just looking at it, from the plain language of that, I think it's very likely that the IRS would say that 1031 treatment or like-kind would not work for crypto. But I have a lot of people call me on it, and a lot of people tell me they're going to do it. So my advice is, if you're someone who's thinking about doing that, 2 really important things. 1, make sure that you report each trade on your return that you're claiming like-kind treatment. Without that, you're not really claiming like-kind treatment. So if you just don't report anything and say like-kind, that doesn't really work. Number 2, I would recommend getting an opinion letter from a tax professional, and that will help you in the event you do get audited and they want to assert penalties to defend against penalties. Okay, and also to help you understand what the rules are. Any questions on that? Because that's like my number one call right there.
Do they treat crypto as a property or security?
It's a property right now.
Property.
But that's another interesting thing is that under US tax law, it's property. Under US securities law, it might be a security. Under US commodities law, it might be a commodity, right? So it's like there's this, it's good, and you know, right now, the legal framework is just not set yet. And I think it's because it's a really complicated area, you know, from my perspective. And I mean, like I was saying earlier, you know, whether cryptocurrency ultimately is a currency, you know, for trading, you know, trading a value, or if it's something else. Again, that to me is not even resolved yet, right? And so how are regulators going to really regulate that? So they're obviously behind by a number of years in figuring these things out, but there's a complexity there that really is makes it difficult for people like me, right? People ask me questions, and I know a little sliver of information, and I try to apply it, but when I get into other areas, you know, even, you know, a lot of attorneys have a tough time with
And
that.
that seems what the SEC and the CFTC are trying to make this differentiation between security tokens and other types of tokens, and this stuff with the Howey test. And
Yes.
So maybe we will actually have regulations that apply to security tokens versus utility
They're gonna
tokens.
have to. I mean,
Well, I think there will be, but I mean, again, I'm not a securities attorney. But I think the problem what's going to happen is that once regulations come in, you have kind of two problems. And again, I've only been involved in crypto for a year and a half. One, so many of these new coins coming out, new tokens, right? And probably a large chunk are not the most well thought out, or they're perhaps intentionally fraudulent vehicles to raise capital, right? So that kind of ruins the party for everybody, a little bit, right? The second thing is they go in and they start to regulate, then it's going to elevate or create a bar to entry for a lot of people. So people that are involved in the space of actually creating tokens with the honest intention of building this software, they're going to have a tough time, right? And it's going to become more expensive. I get calls all day about ICOs, and I had a guy call me the other day and told me that an attorney quoted him $5,000 for legal compliance, but is there a standardized form for an ICO? And I just laughed. I mean, I just like, you know, take the guy that said 5,000. That's like the deal of the century. I mean, I talked to other attorneys. They're talking about, you know, $500,000 for a token to be launched with any sort of legal compliance. So, kind of an interesting area. But I digress. This is the one that I really want to make sure that everybody understands before they leave tonight. Okay. If you have, sorry, question.
Oh yeah, I was gonna ask about like a lot of the token sales, because a lot of them are foreign jurisdiction per se, but basically you just get like a VPN and then all of a sudden they're just tracking it back to like, oh, is this a VPN, like is this a IP from the US? And if it's not, then you're getting that token, but technically you're not a accredited investor, so then what's your standing kind of, or like?
Yeah.
Right, then if you're reporting it, then you're reporting something where like, I don't know if you just use your knowledge your tech knowledge to the best of your abilities, or did you like end up lying about your status as a accredited investor? I don't know how that works.
Yeah. So Alan's going to add on the production disclaimer. I am not a securities attorney. I am not giving investment advice. I'm not doing that stuff. But good question. General rules. Securities law is meant to protect investors, not punish investors. Is the first thing I'd say.
Yeah.
Second thing, to the extent that you're going into foreign jurisdictions for any reason, you want to err on the side of caution here. Okay, and these are kind of the different areas. So, two main forms. Okay, one, foreign bank account report, FBAR. You file that with FinCEN, Financial Crimes Enforcement Network. Okay, and that's not something. If you have a tax preparer, they can prepare that for you as part of the tax return. All right, all you have to do is report the existence of the account and the fair market value at the end of the year, or the highest fair market value. Okay?
And
So
what amount? $10,000?
10,000 is the floor. So you take all of your accounts at any point during that year. If they exceeded 10,000, you have to file that. Okay? And from my perspective, that's going to be if you participated in ICO. I also participated in the Tezos sale. I'm still a believer. I'm holding on. Cryptocurrency, if you have any sort of like, there's different like investments. Havelock Investments is one that I know of where people kind of do these kind of interesting crypto investments. That's going to be part of this. If you have actual cold storage in another country, or the really easy one's gonna be Binance, BTC, which is gone, but any of the other, hundreds of other
Bitfinex.
foreign exchanges. Bitfinex, I think Bitfinex is foreign, right?
Yeah,
Is
they
that
are.
Luxembourg?
Yeah, and now they're
Hong Kong.
BVI.
BVI, okay, so all of those, right? So probably at the end of the year, good idea just to Google all of your exchange accounts, what kind, just, Bitfinex country, right? And figure that out. If they're in that, put them on this form. If the total amount that you keep online,
So the total
total
per,
amount,
exchange.
per exchange?
no, aggregate,
Aggregate.
$10,000 across the board,
Uh,
all right? So it doesn't take much, right? And especially at the end of 17, if you had half a Bitcoin in any, that's 10,000 right there at some point in the year, right? So this is a really big issue because the penalties for this stuff are outrageous. They're really, really big. And kind of the background is that for people that have these accounts, this really comes from UBS and Swiss bank accounts and Cayman Islands accounts, and people who 20 years ago were sending their money offshore to kind of evade tax on capital gains and things like that. So the rules are brutal here. So really want to make sure, so especially too, if you're thinking, if you had past years, you want to figure out whether you need to amend and file any of those returns, okay? Because this is something that is a very easy get. And right now, Paul Manafort, this is what they're getting on. Right, these are actually the rules, not disclosing foreign accounts, okay? Something to keep in mind.
Yeah,
Question?
yeah, so you were saying that's if Bitcoin hits, let's say $10,000, but then it drops down to 8,000, because it hit 10,000, I have to report if it was in an offshore account. So I guess what I'm saying is at the time of reporting, is it 10,000, or is it if it crossed the marker of having 10,000?
I would use the rule at any time during the year,
Okay,
okay? And also, sorry, the other point too is token sales, right?
right.
So if whatever you contributed, whether in Ethereum or Bitcoin or whatever the value of that was at that time,
Yeah.
then I would include that as well.
Okay.
And you don't pay any more tax, there's no downside, you're just disclosing what's going on, and that'll kind of keep you in the future of kind of being embracing and having the issue, right? And hopefully the IRS will give guidance on all that stuff, right? So you don't have to worry about this in the future, but right now we don't have it, so let's be conservative and avoid those issues, okay?
One last question was, so what if I have a trading bot and I'm making trades every 3 seconds or every milliseconds? Is each one of those then short-term capital gains
Yep.
because of the trades, or how does that work? Because I know if you're day trading itself, like stocks, there's certain
Yep.
clarifications of, I don't believe it's short, you're not paying the same tax rate as a short-term capital gain if you're day trading.
So I guess one question would be, would you be a professional trader? I don't know. I mean, you might qualify depending on what else is going on in your kind of global financial picture.
Right.
Other question is kind of a question for John, which is, John, I'll let you answer it, but if you're holding, let's just say you're only buying and selling Ethereum, right? And let's say you have 20 Ethereum that's in cold storage, and then you're going off and doing these micro transactions, right?
Right.
Are you actually selling, from a tax perspective, the amount that you just bought, or are you actually selling the very first little bit that you bought, right?
Right.
You might actually be, depending on all the circumstances, I'll let John hop in here. You might have, yeah, you might have it.
So let's put hypothetical.
Yeah.
You buy a tranche of 50 Ethereum,
Yeah.
and then you have them in a pretty fast, sharp exchange, and then you set an upper limit sell and a lower limit buy. And then Ethereum just goes waving in between your ceiling and your floor, and so you're constantly triggering in and out, in and out.
Right.
And then at the end of the year, you still hold 50 Ethereum.
Right.
According to the method by which Alex and I work, your first sale is that first Ethereum you ever bought. And then you go chipping away at your oldest Ethereum such that the 50 Ethereum you have at the end of the year are the newest ones available. And the ones that are sold are the oldest ones available. And in an inflationary environment like 2017, you have gains all the way down the line. Now, if Ethereum was just holding steady, this thing would wash against itself and who cares?
Right.
But because crypto is generally understood in tax terms today, on a street level, to be a generally inflationary environment, it's fair to use the generality that every disposition is a holding gain or loss, and it's a taxable event. Now, as I mentioned, let's imagine that Ethereum held flat all the way across the game, and then there was buy and sell events triggered on political things, right? There's a coup in Venezuela, there's blah, 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 and you're buying and selling. Although the holding gains and losses are possibly zeros, you're still disposing.
Right.
In our work, we take the most conservative view because we are anticipating future audits, and so we would then list every single sale. And even if the basis is the same as the proceeds, meaning you paid $50 for this Ether token, you got $50 for this Ether token, we would still list each one. Now, whether or not there's an easier method, I don't necessarily know, because our goal is to have ultimate level compliance where the auditor need not even make a phone call. He can look at our ledgers and go, I got it, done. But we can talk a little bit about the methodology of the accounting here once Alex has covered all the legal implications, where we're going to talk through this whole game. Okay, is that okay?
Yeah, so I mean, to this point, I mean, any questions or any sort of like, if I glossed over something that was
Is there any
important?
guidance by the IRS that you have to treat it as FIFO?
No,
Because with stocks, it's not like that.
no, there is no guidance, and that's one of the main issues.
So you guys are basically just taking the conservative tax, thinking, hey, if it ever comes down to it, we took conservative tax and, you know, we did our best effort, and I think the IRS will sort of, is that sort of the thought process there, or?
Yeah, I mean, from my perspective, one, yeah, the conservative, I mean, so, and back up. I've never had a client who was in an audit who was like, that was great. You know what I mean? I've gotten clients refunds in audits, right? I mean, I know they've gone really well. So from my perspective, my view is, right, people coming to us right now who are really trying to figure this out, they want to feel good about the product that they're kind of providing to the IRS, right, with limited exposure. At the same time, I do get calls, and like LIFOs are one I get a lot of as well. And my perspective, same with 1031, it's not 100% clear that the IRS would challenge that. But I think from my own personal experience, I think it's likely that it would if it was selected for an audit.
Yeah.
And if it was, no matter what we all agree with right now,
They can enforce whatever they determine to be, like if they
Yeah.
say, if they come back and say, well, you were using LIFO, but we want FIFO, they can impose that? I mean,
so
obviously-
good question. So that's a perfect bridge to the kind of the next question, right? So I'll go through this kind of quickly here. The life of a tax return and audits, okay? So you file your tax return, 3 years for the audit, for the IRS to change it, okay? Typically what's gonna happen is when you file a tax return, they're gonna compare it against, they have a very antiquated system, but a system nonetheless that basically compares your tax return against all the 1099s, W-2s, 1098s, your 1095, everything, right? To see if it matches up. If it gets flagged for a reason, it can get pulled out and then it'll be kind of a human review of the issues, okay? So for example, that's where I think this 1099K with Coinbase is a huge issue, right? Because if you just bought on Coinbase and transferred out, it's going to say you had all of this kind of these taxable events that really weren't.
Yeah.
So it's a major issue, right? And that's why you want to have, like, for example, so for that issue, you want to make sure that you have a statement in your return explaining that, right? Even if you're not reporting it, okay? If someone pulls it out, audit always gets started by a letter, okay? There'll be a notice in the mail. 3 types of audits: correspondence, office, field, right? Correspondence is a letter. Let's say you file a return and you, for example, don't report a stock sale. Okay, you sold $1,000 of Google stock, you didn't report it on the return. You get a letter that says, dear taxpayer, our records indicate you have a 1099-B of $1,000. You know, you have 30 days to respond. Okay, not a big deal. You file a letter, you provide the documentation. Next one's an office exam. That's where you actually go into the IRS building. Usually more involved issues, but not the highest level issues. Third one's a field exam. That's usually going to be more business related. And that's where they're going to come to your place of work and sit down with you, okay? All 3 of these, you can always have a representative kind of help you, whether that's a CPA or attorney or someone else. Okay, once the audit starts, what you can get: information document request. They want to see documents, right? So that's why we are so big about, we're super anal about CSV, saving your CSV files from your exchanges, right? Saving your bank statements showing ACH transfers from your US bank account into that exchange, right? Because it helps establish basis. Building good records on your return, your tax returns going forward. Those in some ways are kind of a ledger that's gonna be something you can say, look, I've been reporting this way for years. So if you're gonna take a position like LIFO, right? Make sure you can show that you started with LIFO. You didn't change it the year that it helped you, right? That would be, that kind of change of accounting method could be a big problem. Typically, an audit is not going to be some sort of kind of inquest. It's not going to be where they summons you or subpoena you. It's very rare. Okay, so you don't need to be worried with those types of things. At the end of it, they issue what's called an adjustment, right? And they're going to say, dear taxpayer, we think you had this much more income, you owe this much more tax, this much more penalties. Okay, in that is where they would say, we think your accounting method of LIFO is incorrect. We think it's FIFO. Okay, or we disagree with your 1031 or whatever might be the issue. The good thing to know about it is that the IRS has two more steps, right, if you want it. One is the Office of Appeals, one is US Tax Court, okay? And in both of those cases, you're gonna get neutral parties looking at it. So a lot of times in audits, if I have a really bad auditor, I just close it up. I say thank you, and I go on to these people, because I know that I'm gonna do better there, right? And it was with, and the reality is with the issues here that we're talking about tonight, these are unsettled issues. Right? So an auditor might be kind of, they're not going to know. They're going to get guidance from above and just pass that forward. So if you want to challenge a legal determination, this is where you do it and how you do it. Now that being said, that's expensive, right? It's expensive to hire someone like me to go do this. So that's why when I'm talking to people now, I say really you have to evaluate is you kind of elevate your risk for audit. Is it worth it? Is the savings really, potential savings really worth it? Sometimes the people are. But like for 1031, my general rule is if you're not going to defer a couple $100,000 of tax, I probably wouldn't do it. You know, that's kind of my bottom threshold. Just because I know how uncomfortable and how unfun it is. And you have to go to tax court. I mean, it's going to cost you $100,000 to litigate an issue like that competently. By the time you go through it all and really kind of go through it. So, any questions on audits? It's a fun subject. Right. So the sum is the Coinbase. A couple things here important. One is about 13,000 people included. Years 2013 to 2015 are the tax years. I mentioned before that there's usually 3 years for the IRS to audit your return. Okay, to change it. Because Coinbase challenged it, if you're in that group of 13,000, that actually extended that period as well. So I'm having all my clients going back to 13 a minute, okay? Probably the real takeaway for everyone else in the room is that there's no reason to think that the IRS won't issue a summons to other exchanges, US-based exchanges, okay? And one of the things that I learned I didn't know is that for people who are familiar with the concept of AML, KYC, anti-money laundering, or your customer rules, certain foreign exchanges are compliant with US law. So if they're compliant with US law, that means that they are agreeing, basically working with, in many ways, US investigators, if investigators want to. And I know people at ICE, DEA, FBI, IRS-CI, and all of those agencies have relationships with these different, and now that's not to say anyone in this room is concerned about those things, but don't think because they're an exchange, they're going to protect your information. So that's why getting compliance now makes just a lot of sense in avoiding those issues moving forward. It's a fun topic. Let's take a look here. The other big things here, I mean, if they were ever going to do criminal, it would be really not reporting large amounts of capital gains. And being involved in money laundering, one of the things I tell all my clients, never sell crypto outside of an exchange, never for fiat. I mean, you meet someone on Craigslist and go meet at a coffee shop and I get that call and that's just like, do not do that. Some of the few crypto prosecutions I know are related around that type of activity. So really stay away from that.
Why is that a problem? I mean, or using a decentralized exchange or just doing a local Bitcoin, like if someone comes up on a bicycle and,
Yeah. So local Bitcoins is the one. So I'm not a criminal attorney. and I'm not a a criminal attorney, I think we really talk about the idea of money laundering, right? So the issue is this, is that if from my understanding of money laundering, federal money laundering charges, is it's usually that you willingly or knowingly kind of assist in that, right? So the prosecution I know of, my buddy was the attorney on it, and I think there's a Time article about it, but it just came out recently.
Like Girl Scout cookies or whatever?
Yes,
Yeah.
exactly right. And so what he was telling me was that essentially it was a long kind of sting operation, right? Where they kind of befriended this guy, and from my understanding is that the defendant he's a really nice guy, just kind of,
Dude,
yeah, doof might be a way to and essentially, the undercover agent spent all this time in this prosecution, and we're selling Girl Scout cookies in Arizona and all this. So the argument was that he knew that he was selling Girl Scout cookies was a euphemism for,
it's a string of pot.
or some sort of drug or something like
Like,
that.
he
Right?
didn't freaking know that. He thought they were selling Girl Scout cookies.
Oh my God.
Yeah. So eventually what happened is that they picked him up for money laundering, saying he was knowingly basically turning U.S. dollars into crypto and yada yada. The reason that's a problem is if and you're helping people do that, that's an issue. And that's why when you open up a Coinbase account, they want your driver's license, right? They're taking that step.
So they got that guy, was it Michigan? They arrested him for money laundering. They had an undercover sting, and he was just selling crypto, $5,000 worth of crypto.
Yeah,
They did a local restaurant or something, and they popped him.
yeah.
So that's a.
Wait, so it's not legal if I meet someone in a coffee shop and he gives me $1,000 in cash, I can't
I
send.
think that's legal. You have to know that he's got money from an illicit source. And that was where the case that he was talking about hinged on, right? Is so they said Girl Scout cookie.
Right.
But that wasn't enough. So then they came back to him later, and then they told him he was going to buy cocaine with it. I think that's what the case hinged on. Because he was like, oh, I thought these guys were trying to impress me or something.
So if you're buying illegal goods and services with this currency, then
Alan,
yeah.
it's legal, it's a terrible idea. Because let's imagine that this guy traffics in unregistered firearms, and he needs cryptocurrency, and he doesn't want to sign up for Coinbase because they're going to ask for his license. So he calls you up and he goes, dude, I'll pay you $10,000 for Bitcoin. It's trading at 9,000 right now. I'm going to come up with a thumb drive and a bicycle
Right.
and $10,000 in cash. Don't do it.
Yeah, I mean, another practical purpose here is that, at least until people, really do use crypto as a way to purchase things, right?
Mhm.
Before that, every time that you transfer out of your exchange, as the ledger reflects a transfer out to a different wallet, we're taking the stance that's not a taxable event, right? And we're going to consistently apply that. But if there's a whole bunch of these smaller transactions where you actually are selling for cash, right? Then you have kind of an imperfect set of records there, as well as the fact that could someone come down the line later and say, well, how do I know all of these transferred out more for sales for cash, right?
Mm.
So just from a keeping kind of neat
Optics.
and tidy. Yeah.
Well, so there's situations, and this has happened to me. I don't know about you, but like I've transferred money out to wallets, and I've lost crypto.
Yeah.
Like I just don't know where it is. I
Oh, yeah,
transferred
what-
it out. It was on a hardware wallet. I don't know where the hardware wallet is now.
Send a Bitcoin to an Ether address.
Ether address,
Right? Like,
make
what happens then?
mistake,
It's totally
like, how is-
unrecoverable.
How is
Yeah.
that treated?
Well, so yeah, that's a really good question. I mean, I think there's kind of two answers there. One is you haven't realized any gain or loss on it, right? It's just kind of lost. Okay.
Lost property.
Yeah, if you have a piece of art and it burned up in a
Yeah, there's
fire.
different rules here, but I mean, before whether you can claim a loss, I mean, I'm more worried about whether there's income, right? And so there's no other income being derived from it. It's not there's a different altcoin all of a sudden that's now in your possession in your exchange account or somewhere else, nor is there some sort of fiat deposit into a bank account or something along those lines. Is it possible that someone could make an argument? Sure, but it's unlikely that the IRS would impute income on something like that. I think a lot of our clients, John, have loss issues through
Very
time.
Very common.
And that's kind of one of the things we spend time on is figuring out, and as John puts together kind of an overall review, he's documenting that, right? We're documenting that now, even though it's not then, we're documenting it now, so in the future, there's not any issues. The other thing that, I mean, and I don't know, you guys are all, probably, everyone in this room probably knows more about crypto than I do. I mean, to be frank with you, I know taxation of it. But I know in like tax seminars, I've heard people say that the blockchain is just prosecutorial futures. And what that, I think really from perspective of eventually, there will be an efficient way probably of kind of tracking this stuff, right? So if there ever were items that you lost, you know, it should be able to be demonstrated by the blockchain in the same way. That it
Well, no, because
wasn't-
you have a private key, right? That's kind of like the key to your house. So
Yes.
when you lose your key, you can't prove you lost your key, but like, you know, to them it looks like you still own it.
You know, if you still own it, it's a taxable event.
What if,
Okay.
I recently made a large gift donation to somebody, how is that treated? Like, if I just gift you,
I'm gonna talk about that.
yeah.
Yeah.
Okay.
Yeah, we're gonna cover that.
Perfect segue.
Do you want me to just start the whole ramp, or you want me to?
Sure.
All right. So, I work with Alex. I'm a CPA, Alex is a lawyer. My background is financial accounting, all right? So, here's a guy that owns a power plant, and he has to design a maintenance schedule that's gonna be the most efficient one. I help him do that, that's my background. So my skill set is to build spreadsheets that answer many different questions in one format and that are easily referenceable. So when Alex approached me about doing cryptocurrency work, for practical purposes, the challenge was, how shall we build the evidence of the cryptocurrency activity such that whatever questions we have about it, capital gains, how long was the cryptocurrency held? Where is the activity? Is it on a foreign exchange or is it local? And then additionally, what's the balance at the end? What is it worth? If you were to market, what would be the gains today? We needed to build a system that would capture all of that. So I worked with Alex and we did that. What I'm going to cover is my accounting method from front to back. And then we can talk about specific iterations like a gift. Specific iterations like if there's a loss and we've decided that the legal position is fair, we're going to take the loss, how does it work in the accounting? And then we're going to talk about things like if you're trading on margin and you don't want to buy the services of a CPA and a tax lawyer, like what are the mechanics? Like what does the spreadsheet look like? And I'll talk about it. I will say also, I have this written down in a pretty clean format that we include in a letter to the auditor. At the end of our work, what we do is we write out a big letter that I draft that says, hey, future auditor, if you exist, here's what happened here. These are all the documents we looked at. This is what we did with those documents. We have the raw document, the document in the middle as I'm formatting, and the end document so that you can see that they all tie together. These are the recollections that our client had where there's no evidence for it. This is how we dealt with that. You can look at row X of this particular spreadsheet that shows this purchase, etc. Then we collate, etc. It's all written down. I would say that, if I'm not mistaken, Alex's information is on this PowerPoint, and then also here Alex is, and so I feel comfortable if Alex wants to share that, but it's Alex owns that, and so if you want like just the raw, like look at it and read it later, then that way we can have a conversation, and that way you can have something to reference later. Talk to Alex about that. Is that fair? Okay, so here comes the client. The client says to me, I did a bunch of cryptocurrency stuff, what do I do? The most important part of our job, Alex and my job, aside from knowing how cryptocurrency works, is the intake interview. So I have some notes, they're on a yellow piece of paper. The intake interview is where Alex and I ask the client an extremely tedious set of questions that feel like it's the same question over and over again. And you would be shocked at how many times really sharp clients, smarter than us by a mile, you ask the same question in different ways, and all of a sudden you start getting different answers because, not because anybody's thoughtless, but because with cryptocurrency it is never clear what qualifies as a yes to some questions. Here's some examples, right? We need to know every time that you went from fiat to crypto. People go, yeah, well, I got a Coinbase account, that's the way I buy in. And we go, okay, that's cool. Did you ever buy crypto from somebody like way back when? No. Okay. Did you ever have a friend buy cryptocurrency for you where you gave them like $100 and then they're like, oh yeah, that happened. You're like, well, that's fiat to crypto. It's not because the guy's trying to evade us, and it's not because somebody isn't paying attention. It's because if we say, what are the iterations in which you went from fiat to crypto? There are so many different ways that that can happen. It's not clear when you should say yes to the question and when you should say no. This is a challenge for somebody to automate my job, right? Soon enough, there'll be a TurboTax for what I do, right? If there's a TurboTax and you answer all the questions, load your exchange data, bam, there you go. Soon enough, that'll happen, and I'll go back to doing power plant work. Fine. But in the meantime, the hard part about TurboTax, for instance, is TurboTax asks you, like, hey, did you get married? Do you own a boat? Like, do you qualify for a farm subsidy? And they're asking all these questions. And TurboTax has a nice little meter that puts it, when it goes green, you feel good. We have to just do this by hand. Also, all of our clients, Alex and ours, are generally early adopters. And that means that our clients are from, as Paul Kelly has said, the Wild West days. When here's a guy on a subreddit with a pretty good rating, and you can wire money out of an account through Dwala, and you're going to get bitcoins on a weird hard drive. Like that happened, like a ton of our clients have that stuff. Right? So our challenge is, all right, we've got to build this up into a proper accounting ledger. The intake interview, this tells me, and this tells Alex, for me it tells me, where do I need to look for errors? And it tells Alex, where does Alex need to look for legal issues, compliance issues? So, every iteration of fiat to crypto. It sounds cut and dry. It really isn't. Another example of that, just because not to belabor the point, but we had a client where we were looking at his ending balances after I've run through the whole ledger, and he said, and I told him, this cannot be it. Because this says you sold more bitcoins than you ever owned. It can't be the case. That means we're missing sales. You had sales that I don't have a record of. And we were looking through his GDAX ledger, we're looking through Poloniex, and all my stuff is tying line to line. And then, after 2 hours, really smart guy, he goes, oh wait, you know what? I did an art project like 5 years ago, and a guy invested in my art project, and he invested 37 bitcoins in it. And then I put that onto a Coinbase account, and I had to sell some of those to pay for our contractors that were doing in my art project. That is not an obvious yes answer for how did you acquire this cryptocurrency? Because it's not clear that it's his right out of the gate, right? I'm a CPA. I know the answer, but it's not obvious. So when we're doing the intake interview, it's tedious. It's a 2-hour interview at the minimum. And it's because we have to ask the same question, trying to slice all the iterations out. And it's not because we're trying to be mean, and it's not because we don't think everybody is sharp, but it's because it's hard. So, cryptocurrency acquired with fiat, whether it's cash given and then the guy gives you like a thumb drive, or writes a private key on a napkin, or however it happened, all of the iterations. Hopefully it's just Coinbase, then it's easy. Then we need to know every iteration of crypto to other type of crypto. So that means if you got a GDAX and you're going Litecoin to Ethereum, etc., or if you've got any exchange that you go, what if you participate in an ICO? So they say, all right, if you want the Gnosis coin, it's going to cost you 10 ethers. That's a crypto to crypto, even if you haven't yet taken possession of the new tokens. You've still disposed of your old tokens, and so you have a right, ostensibly, to those future tokens, so that occurs even if they're not already in your wallet. That counts as a crypto to crypto. This goes all down the line. We ask, have you ever been part of a cryptocurrency fork? Because even if you didn't have to dispose of your original cryptocurrency, you now have a whole other crypto. And we have to figure out, when did you get it? What was the basis? How many of them do you own? And that counts as a yes. But it's not an obvious yes, going crypto to crypto, because you didn't dispose of any. The next question is, what are all the iterations in which you went from crypto back to fiat? Some people might say like, well, you know, I sold 2 Bitcoin and I got Venezuelan bolivars when I was down there as a television reporter. That counts. Oh, but it wasn't US dollars. It still counts, right? What if you have a thumb drive with some crypto on it and you sell it to the guy on the bicycle and he gives you $1,000 in cash? That counts. And to the best of our ability, we have to build the record of those transactions, because you're not coming to us if you want to hide anything. You're only coming to us because you want to disclose everything and be within compliance. The next iteration is, have you ever bought goods or services by giving up the crypto? The most obvious one of that to me, but not obvious at all to the crypto users, is an exchange fee. You bought a service from GDAX. So you have given up cryptocurrency and you've gotten a service. So a fee is a sale of cryptocurrency at the market value of that crypto on that day. And you got your service. So you have a capital gain or loss on the cryptocurrency that made up the fee that you paid. Question?
You always have the option to choose whether your fees are USD or in that crypto. Do you have a recommendation there?
As much as you can pay USD in order to stay in crypto, do that. Insofar as my work is concerned, it is not an issue unless it's a crazy altcoin that I can't get a ledger for. I have, I think, 90 historical ledgers of cryptocurrencies, like closing price on given days. I have a ton of them, and they're all built into this giant sheet. So if you're paying a regularly used altcoin fee, it's not different for my work if you pay in US dollars. It's also not different for taxes if you pay in US dollars or crypto. Fees are deductible on Schedule A, so that's investment fees, unless you're a professional. But your fee is an exchange of cryptocurrency, in the case that it's denominated as such, for a service.
So John, so like my margin rollover fees, my transaction fees, those would be treated as FIFO as well?
Yes, Alan's question is, in the case that you do swaps, or you have futures positions, and you have fees that are associated with your futures positions, those fees are dispositions of cryptocurrencies for a service, and the disposition is treated on a FIFO basis insofar as the work that Alex and I do. And so that means that in that case, all of those fees are in an inflationary environment representing short-term capital gains or long-term capital gains depending on your role.
Mm-hmm.
Does that answer your question?
Okay, yeah.
Okay, next, have you ever bought goods or services with crypto? What about sending a little tip? I think it was change tip or something like that, where you like somebody's Reddit comments and you send them like a little dust of a Bitcoin. That counts. You've, to a certain extent, bought something, right? In the same way as if you tip a bartender, you bought something from that bartender, even if you don't then have a product. Now,
What about, what about, and goes back to mixing services, right? If I'm not technically in possession of the crypto, right? I have Bitcoin, I send it into a mixer, right? It's now in third party's hands, right? Now the IRS would say, hey, you've now disposed of that asset, right? Then it comes back to you 20 minutes later, an hour later, mixed. Is that considered a...
So,
What's a mixer?
So a mixer basically takes, if you have a Bitcoin address and you don't want people to know, like, you can trace things through the blockchain. It's not, it's very hard to do forensically, but like a Bitcoin mixer basically takes the coin, sends it into this thing that transfers around to a bunch of different addresses, right? And mixes it up, so it's very hard to tell, like, it takes your coins and mixes them with a bunch of other people's coins, and then it comes out the other side the same amount. So it's a one-to-one, but in the middle,
You're
there's
trying
a
to create
bunch of...
anonymity.
Yeah, but
It's
you
basically-
never
How is that not money
give up
laundering?
your ownership, right? It's
What's that?
yours. You're not giving up your ownership.
yeah,
It's
so,
yours.
so
Well,
Great
you
question.
you're transferring, I mean, like, the whole concept of ownership in the crypto space is really gray, because, like, if I, technically, if I transfer my crypto to another address, they have the private keys to that address. They technically own that crypto at that point. If they decide, that's it, we're good, we're just gonna shut this down and take our money and run, they own my crypto.
It means like John sends me 1 Bitcoin to my address, and I
Right.
send him 1
One
Bitcoin right back. Has he disposed to me and I've disposed to him?
If I'm doing the work, I only see one side of this transaction, because I'm only doing one claim at a time, right? And so then I see a transfer out, and then I see a transfer in. I'm gonna get on the phone with you and say, what is this transfer?
Yeah.
And if you told me, that's me putting it through a mixer, the most conservative position is that you sold that Bitcoin, and then you bought a new Bitcoin at market value. Now, if, now remember, this is a conservative position.
Gift up to
Now,
15K.
if you are asserting that you gave up your right to that Bitcoin in putting it through the tumbler, and then you gained the right to a new Bitcoin when it comes out, it's fair to say that this is a sale and then a purchase. Now, whether it's a sale for zero and a purchase for
I
zero,
mean, wouldn't that fall under like wash trade rules where it's like,
Alex?
Possibly, but a wash rule is, I mean, it really is gonna prevent your loss, or it's gonna prevent you from using your losses, right? And so whether wash rules apply is still an open question right now. I slide on it, but
okay.
I don't get too boring on that. But, you know, I mean, ultimately, whatever you do there, from my perspective, and I get what you're saying is, you know, in substance, I never really exchanged that Bitcoin, right?
Exactly.
So from my perspective, if you have those types of transactions, I would include a statement on the return, not lengthy, but, you know, just a statement that says,
Okay.
you know, taxpayer, you know, even if you put, you know,
I mean, I don't know. I'm kind of currently under the assumption that and I could be completely wrong in this, so don't take my word, but like, and I've talked to my tax people about this, but like, the IRS is sort of saying, hey, you know, things that happened in the past, like, we're slowly coming into this, okay, with Wild West, it's still somewhat Wild West right now, but like, these sort of things, it's like, you know, how do I say this? It's like, if you're trying to make best effort, right? That's the real key here. Right?
Well,
If
we're not going to cover that,
Yeah.
right? Because as Alex mentioned, we have to use a reasonable approach and apply it uniformly across our endeavor. And I'm going to talk a little bit about the actual technical, how do I build the sheets, what's my step-by-step method. And I think that we're going to capture that iteration where I deal with deposits, withdrawals, and transfers in a wallet that don't appear to change the ownership.
Right.
Now, you had asked earlier, what about a gift? The way that I envision a gift is pretend you sold your cryptocurrency for fiat and gave the fiat instead. For practical purposes, that's more or less the same spirit of the transaction, and it clears up any accounting issues. So if I have one Bitcoin and it's trading at 10,000 bucks, and I want to give it to my roommate as a gift, not as a payment for anything, instead of giving him one Bitcoin, I can sell it for $10,000, hand him 10,000 US dollars, and he could do with it what he likes. Because in a certain sense, I'm exchanging ownership. The difference between going to fiat and giving it to him, or just giving it to him, on an accounting standpoint is not different. But it clears up the accounting for me, because I have to figure out, you've disposed of this Bitcoin now. So if you bought a Bitcoin at $100 and now it's trading at $10,000, and here's your buddy, and you want to give him a gift of one Bitcoin, for my purposes, you have a long-term capital gain
Yeah.
that you have to come out of pocket to give.
Now, what is, sorry.
I deal with this all the time. So if you are to give stock to your family member or a friend, you can give up to 15,000 a year tax-free. If you give more than 15,000, if the value of the property, if it's more than 15,000, then you have to notify IRS. Not necessarily you have to pay tax for it, but you have to inform them. Because every person, all of us, we have unified credit up to 5 million with the new tax reform.
So if you make a gift to anybody above $15,000, you have to notify the IRS.
Yes.
Yeah, you have to file
You have to notify them, yeah. Not
Okay.
necessarily have
Do
to pay.
they? Okay. So that both the giver of their request and the receiver both have to file?
Just the giver.
Just the giver.
Just the giver, yeah.
Okay.
If grandma
So-
gives you 20 grand, she has to notify the
But now,
IRS.
okay, but then if I get grandma's money, now what do I have to do?
You have to, no, nothing. You just,
Nothing.
you should
If it's 15 grand or less, you have nothing to do.
But let's say it's $100,000, what does that do?
She's gonna pay taxes
On
on
that.
your portion over the 15 grand,
Okay.
and then you're
Let me
gonna,
clarify that.
So
Like
the-
with any other asset class, if you getting 15,000, like if I give to you $15,000 of stock,
Right.
like I don't pay taxes. But if I give you 100,000, I notify IRS.
Right.
And IRS has a record on you. So you have all of us, we have $5 million lifetime. So for instance, it's a credit, unified credit. So if I give you 100,000, so my credit goes down. It's $4,900,000 right now. So but if I end up giving away 5 million during my lifetime, only after that I would have to pay taxes on it.
Okay.
It's complicated, but
I'm trying to, because I've recently gifted considerable sums of Bitcoin to some people and
15 grand or more?
yes, and so on their end, I pay the taxes, but on their end, I just want to make sure that there's not any.
Alex?
They're fine. You just need to file like your tax return.
Okay.
I think that's the same.
Okay.
but if they
15%
want to
per-
sell it, they inherit your cost basis.
Cost
If you-
basis. So I
yes,
need to make
It's
let
a-
them be aware of my cost basis.
Yes, they need to know your cost
I
basis. Yes.
see. Okay.
Yeah.
Well, doesn't it get reset if you're paying the taxes on
What's
it?
that?
Wouldn't it be, the cost basis be
At that
the
moment,
taxation.
after,
doesn't it? Yeah, doesn't it?
So-
at
wouldn't it
the
be
transfer
reset? Yeah.
date?
This shit is complicated.
Yeah, that's why I need to work with a
Now,
professional.
in the case that we are porting the cost basis on a gift, then my job would be to figure out which Bitcoin has been disposed here in this gift line, and what was the basis of the one you're disposing, and then you're disposing it for exactly the value of your basis, and then you're gonna pay taxes on the value of the gift above 15 grand. And then they're gonna have a basis. However, if you have 20,000 lines of transactions, this is hard work,
Yeah.
Yeah.
right? So for my money, don't give gifts. If you want to give a
I'll go ask her back.
gift, or
actually hilarious.
right?
Can I have that Bitcoin back? I hold this in on the cash. Let me
Here's another practical consideration, right? Would it have been the same for you to give dollars? I had a client once, he's a web developer,
No.
and people wanted him to invest in their company by giving web development services. And he asked me, should I invest in this company? All I'm doing is giving web development services. So I asked him, how long is it gonna take? So it is about 10 hours of services. So I worked out his billing rate, and it was something like 15 grand. And he's hot stuff. And then I showed him 15 grand written down. I said, would you invest in this company for $15,000? He went, hell no. So then don't do it. If you're gonna give a gift worth $20,000, would you give them 20,000 US dollars? Is it different if you give them one Bitcoin?
Yeah. Well, okay, but there's different use cases there though. Like, for example, like let's say that I see somebody doing, and this is sort of the example that I did, is like I see somebody doing something, I think that their work is valuable, you know, I don't really necessarily know them per se,
Sure.
right? But I want to gift to them, right? Now, if I do that on a cash basis, I gotta contact them, right? I gotta figure out their bank account, I gotta get their bank account information, I gotta send cash to them. On Bitcoin, you stick a Bitcoin address up on the internet, and people can just donate into that, right?
Sure.
So there's a completely different, crypto changes the whole
That's good.
Yeah.
stream
It's a
on
different
donations.
utility, sure.
So I can send any amount of money to any person in the world and donate to them in 10 minutes, whereas if I want to do the same amount with fiat,
Now,
the,
is this,
That's a good point.
the barrier to go over is much, much higher.
sure, is this a gift or a donation?
It's a gift.
All right.
Wait,
So-
what's the difference?
There's
Hold on.
So it's
Yeah,
not, it's not,
that's-
it's
that is
not
a
a,
That's a difference.
it's not an organization that is listed as a 501c
Right.
charity, right? So it's, although I've done that too, I've given crypto to charity as well. So there's multiple use cases here where, I don't know what.
So for practical purposes, our job then in the giving of a gift is to, in the first place, ensure if it's $15,000 or less, we don't have to worry about their basis. insofar as we don't have a reporting requirement. So we can make decisions based on what's the billing rate of the guy that's gonna figure this out, and how much do I wanna pay in capital gains? What has been the inflationary period of the crypto holdings up until this one, et cetera. We can make rational decisions based that way. If we are gonna go to the penny here, then what we'd have to do is figure out which crypto holdings you're actually giving away, whether it's a tranche of different purchases across different dates, or a slice of a big purchase that you had made, and then port the basis over. This is where the work that Alex and I do differs from an API like CoinTracking.info for bitcoin.tax. Those are really good APIs, really good. But these are the sorts of things that are very difficult to go through and parse out of an API, especially when you have a significant enough volume. Whereas with Alex and I, because we've done the intake interview, we know what we're looking for. And so if you are our client and you told us, I made a gift of X Bitcoins and they were worth 20 grand, what do? I would then say, when did you make the gift? Let's look it up, let's find it. And then I know what I'm looking for as I go into the work, so that we don't have to find it out of the big haystack.
Yeah.
We are, before the needle goes in, we are splitting it
But
out.
you're treating it as a sale with a taxable gain.
Yes, or at the moment, if it's a common gift of 20 bones, it's a taxable gain.
That's the key, right? So you kind of have three things. So one is you have a taxable gain to you, the gift going to your friend, whoever this is. You have to report if it exceeds the minimum reporting amount, 15,000 or 14,000 for the year, right? And as far as kind of like contribution, donation, those type of things, I always think of charitable contribution because that's what would be the deduction you get on as, your Schedule A, your taxes. And if it's not a, qualified organization, it doesn't, it's not getting.
Okay.
So, that's kind of the analysis.
You can see that this is hard work.
Yeah.
And that if you were TurboTaxing something like this is not easy, right? I still want somebody to build a TurboTax. Question.
So I'm still stuck on something. So if we, like real world, right? If I want to buy a house in another country,
Sure.
I have to buy it in the local currency, right? So I have my USD, and whatever the exchange rate is between USD and that currency, I change it at that rate, and then I buy the house.
Yep.
Right. So I don't pay tax on the exchange.
That's
Right.
correct.
I just pay whatever the exchange rate is. So
Now-
why, if I'm swapping Ethereum for Bitcoin or vice versa, am I paying? Is that realized?
It's not a currency.
Because it's not a currency.
It's
It's a property.
It's a great question. It's just a tax policy question. It's not treated as currency for federal tax purposes. They decided, that's one of the few points that the IRS decided. So I mean, it's kind of like, this is gonna sound sassy, but it's like, call your congressman. I mean, seriously, it's the reality.
It's fucking bullshit.
Yes, I agree with that.
So another question of practicality here, so getting back a little bit to trading between currencies. So what you're doing in effect, going from ultimately at some point back in history, fiat, to let's say Bitcoin, to Ethereum, to Litecoin or whatever, right?
Sure.
You haven't yet sold it back to fiat. You are just recording these events, but what is the tax? What is the taxable amount?
That's an excellent question. So let's take that hypothetical example. It's December 1st, 2016. You buy one Bitcoin for $1,000. Then in the middle of 2017, you take one Bitcoin and you exchange it for 10 Ethereum tokens. Then later in 2016, you take 10 Ethereum tokens and you exchange them for 100 Litecoins. And then now you're holding 100 Litecoins. What has happened? That's an excellent question. So the first event, you take fiat and you buy Bitcoin, no taxable event. So to a certain extent, nothing has happened. When you take one Bitcoin and exchange it for 10 Ethereum, now you have a taxable event. Let's presume that the Bitcoin that you bought for $1,000 now has a market value of $2,000. You are now holding 10 Ethereum at $20 a piece, which makes up $2,000, and you have a short-term capital gain of $1,000. And you owe the taxes regardless if you come to fiat or not. So you have to come out of pocket with fiat currency to pay your taxes because you're still holding 20 Ethereum tokens. Sorry, 10 Ethereum tokens. So far, so good? Now, at $20 a pop, you've got 10 Ethereum tokens and you are out of pocket somewhere to the neighborhood of 30% out of pocket fiat to pay your taxes. Now you have 10 Ethereum tokens and you exchange them for 100 Litecoins. And let's imagine that Ethereum tokens are trading at $25 per token when you exchange for 100 Litecoins. You now have 5 times 20, so you have $100 fiat, short-term capital gain that you have to come out of pocket again for, and now you're holding 100 Litecoins. And your
Because
base
effectively, every time you sell something, no matter what you sell it to, it's a difference between what you bought, whatever that is, for,
precisely right.
to what you sold.
If the USD value is the same in the end, is there effectively any tax?
In the end of what?
So $1,000 at the beginning, I can do whatever the hell I want. In the end, the Litecoin is still worth 1,000.
The answer is not.
So it would be a wash.
Wait, hold
No.
on.
No.
If you have all that stuff, you go to the trades.
So yeah, so I have a Bitcoin.
It was in the same-
I go to
it's in the
10
same
Ether. Now I have 100 Litecoin. It's 1,000, but they don't appreciate. They all stay essentially the same.
Sure, so let's take that example. You buy one Bitcoin for $1,000. Then, 6 months later, Bitcoin is trading for $1,000 and you buy 10 Ethereum. And so you just swap the Bitcoin for Ethereum. That means you bought Bitcoin for $1,000 and you sold the Bitcoin for $1,000.
So no capital gains.
You do have a reporting requirement,
That's
There's no
okay.
gains.
you just don't have any gains.
I'm just
So
trying to see
you're-
how screwed I am.
Sure,
Because
sure.
I haven't made any money
That's fair.
taxing, but I have like a huge volume.
No,
So I don't
So
want
you're
to
not
Right, so-
swapping one currency for another, you make a
Yeah.
sale. And
You're only
Yes.
paying taxes on, you're
stock,
only paying taxes on
you're
three
not
Yes.
swapping Apple stock for IBM stock, you sell your stock and then you buy another.
Precisely right. Every exchange of crypto to crypto is both a buy and a sell.
Yes.
Now, let's look at this question. You buy one Bitcoin for $1,000 and let's say it's June in year one. There you go, one Bitcoin. Then Bitcoin goes to 20,000 bucks per Bitcoin. Yay, you sell that Bitcoin for 10 Ethereums. And then the whole thing goes down and you sell those 10 Ethereums for $1,000.
You're screwed.
Well, you have a capital gain of
You have capital
$19,000
You can only offset
and a
by
capital
Yeah.
loss of $19,000. Now, if I'm not mistaken, you net those against each other. There you
I
go.
thought you can only take a
Sorry.
3 loss though, right? So you have to pay
That's-
17.
Oh.
That's a good question. So if it's the same year,
Mm-hmm.
it's all gonna net together. So in your
Yeah.
example of this,
It's
Here's
for
my
it's
next
the
question.
carry,
After
it's the
this-
I
carry
started
forward
with
loss.
$10,000.
No,
I now
you're
have
not
way
gonna
less
pay.
than that.
No,
Do
no,
I
no.
have to pay tax
No, no.
effectively?
Probably not.
if it was during 2017, no.
The 3,000 is just for a forward loss.
It's for-
It's not-
it's-
it's-
So here's,
Yeah.
let me give you in a hypothetical, right? You buy a Bitcoin for $1,000, for $10,000. And then you sell that Bitcoin for $6,000, fiat to fiat, right? So you 10,000 bucks, buy a Bitcoin, sell the Bitcoin for $6,000. You have $4,000 capital loss. You get to take a $3,000 loss this year
And one
and
next year.
carry $1,000 to next year.
Cool.
Does that make
Intuitively,
sense?
this is what makes sense, but because I was new at this, like I wasn't sure
Sure.
what way to take my fees,
Right.
or do I take it in
No.
dollars or not? Like, when you have dollars or USD on like Kraken, for instance, it's called like XUSD, so I don't know
Yeah.
if this is actually USD or if
No,
it's
it's
like some
USD.
sort of hybrid shit that they're doing under the hood. Like, I don't know.
Well,
I'm just
there's
trying to
not-
make the
there is-
numbers
no,
go up,
that's-
and when they
that's-
don't, I don't want
That's
my
a
tax
really
rate.
good point because a lot of people, there's Tether, which is
Tether's a crypto.
Tether's a crypto. People don't know this. People think it says USDT and they think, oh, I'm in US dollars. It's not US dollars. It's crypto. It's a coin that's out there, and a lot of people have that misconception that
Sure, sure.
that they're in fiat, but they're really not.
Now, just for the sake of caution, let me just reiterate now, give you a similar hypothetical. You buy a Bitcoin for $1,000 on December 1, and then you sell it for Ether when Bitcoin's trading at $20,000 on December 30th. You have a $19,000 capital gain. Then after the Rose Bowl on just January 1st, the whole thing goes down and you sell the whole thing and you're back to $1,000 in fiat. Now, yes, you're out of pocket with a lot. And then your 2018 loss can't do anything but carry forward unless you got a sharp attorney who's trying to do some carrybacks, and.
Are there people who can like swap basis at the end of the year to like minimize their taxes?
If you die
Is
and
that
you
allowed?
have a child, sure. No.
Oh, you-
No. So, what we talked about so far. Anytime you went from fiat to crypto. Anytime you went from crypto to crypto. Anytime you went from crypto to fiat. Anytime you went from your goods and services and received crypto. Or anytime you went from your crypto and received goods or services. We need to know everything. So what Alex and I usually do is we start with, tell us from front to back, when did you start? Tell us the story. The reason is because this is what auditors want to hear this. They want to know, like, yeah, how did you get involved? What are we looking at in terms of a landscape? And then that helps me look and spot, where do I need to pay attention? Because if you are telling me I gave a gift and it might be more than 15 grand and it's to a relative, I need to pay really close attention, and out of a giant ledger of activity, I need to be able to pull it out. Because Alex is going to make legal decisions about that when I'm just doing accounting stuff. Does that make sense? All right, so at this point, right, now I know crypto to fiat, fiat to crypto, crypto to crypto, goods and services back and forth to crypto. Now I start my actual nerd work. I take all of your ledgers of your exchanges. The exchanges have to include deposits and withdrawals. And I format them in a big uniform format for each exchange. So if you give me, here's Coinbase, here's Poloniex, and here's Kraken. I take your Coinbase and just do a reformatting. But it's a reformatting into a very particular format. And then I take your Kraken and I reformat it. And the reformatting is exactly the same as the format that I did for Coinbase. In terms of what's the column doing? Are the numbers positive or negative depending on what is happening? And then I do the same thing for all of your exchanges. Then, in the case that you've bought services for crypto, let's say that you had a private detective tail your girlfriend and you paid him in bitcoins. That is a sale of bitcoins. And so now I have to build a ledger of those transactions, and I do it in the same format as your exchanges. Now, once I have formatted every cryptocurrency transaction, I have them all in the same format. Then I put them all into one big giant ledger. And this ledger, it has a column that says on what exchange is this, so that then I can reference, right? So now I have a huge ledger of all your Bitcoin transactions, fiat to crypto, crypto to crypto, crypto to fiat. Goods and services are either revenue or sale, depending on what side of the transaction you're on. If you have a gift and it's a small ball, then I'm treating it as a sale. If you have a loss, and Alex has determined that this is a write-offable loss, I'm deeming it as a sale for $0 and I'm annotating that I can find it as a loss. If you're mining, I'm treating it as revenue, and I'm treating it as revenue on the basis of the value on that day. I have a huge ledger, and it's all of your cryptocurrency activity. My longest ledger, 479,000 rows long. Right? This is big. Like my computer is flexing. It's hard. Right? And this is also not something that I can go and search items once it's in the ledger, which is why we have to do the intake interview. I need to know where the errors are going to be before I do it. Margin trading is in here, right? If you take a futures position and you win on the futures position, that's revenue to you. And it's revenue at the basis on the day you realize the revenue. And that's in there. And I'm formatting your Kraken or Poloniex account or whatever, right? So if you have a margin position and they're only giving you the net result of your margin positions, you're booking that both as revenue, which you pay taxes on, and also as a purchase of cryptocurrency, where the basis is the value of the currency on that day, because you've already paid taxes on that gain, on the futures gain, not on a holding gain. That way, when you dispose of it, your basis is on the day of acquisition. Does that make sense to you?
Kind of. Can you walk me through?
Yeah, can you say that?
Give
I want to
time
hear
with how
you.
Okay,
margin
sure.
trading would work.
All right,
so I have, let's say,
If-
Yeah, I'll give you.
Yeah,
I'll
give
give
us
you
a good
I
one.
buy $5,000 now.
All right, so you have one Bitcoin,
Yep.
and you have Kraken, and you say, I want to go long Bitcoin, and I'm going to post my Bitcoin as collateral. Okay.
We reverse it and do shorts.
Shorts are much harder. That's all I do. Right, okay. So now you're going long on Bitcoin, you've posted your Bitcoin as collateral, no tax event so far,
Okay.
right? Then you got to pay a fee to take the long position. Fee is an investment expense. If your fee is in crypto, it's a disposition of crypto, and you have a holding gain or loss on that crypto that you dispose to pay the fee. Your one Bitcoin is still here. It's collateral. Then let's say 4 months later, the option closes, you're in the money. And now they're giving you back 1.5 Bitcoin. On a Kraken ledger, you're going to see margin trade 0.5 Bitcoin. It's not going to discuss your collateral, right? Because Kraken just gives you the net. Now let's say that you think to yourself, I'm not paying John and Alex, these guys are ridiculous. I'm posting this on bitcoin.tax, what do I do? Right? What you do is you have to list that in 2 ways for yourself. The first way is as revenue, because you owe taxes on a futures gain. And the second way is as an acquisition of Bitcoin for the value on the day. So, to flesh out this hypothetical, Bitcoin is trading at $1,000 today. You take your Bitcoin and you post it as collateral. You pay 0.1 Bitcoin as a fee out of a different pocket. You now have a fee, 0.1 out of 1,000, which somebody can do that.
Sorry, but that Bitcoin that you put into collateral, this contract, that rollover fee is going to be coming out of that one Bitcoin. So now you got to know the cost basis of that Bitcoin, and now you're disposing of it in these right? That's
now, if you are doing specific identification where you're saying this particular Bitcoin is the one paying the fee, you need to know the basis of that Bitcoin.
Wouldn't it be FIFO? Isn't it just going to be the first Bitcoin that you have?
In my format, it's FIFO.
Okay.
It's the oldest Bitcoin that you have. That's the one that you've posted, and that's the one where the fees are coming.
So right now we're generating some kind of cap.
Yeah, there's a capital gain on every fee in an inflationary environment.
Okay, so there's that piece now.
Sure.
Sorry, I just wanted.
And this is why this is different from like ordinary swaps, like down, in the stock exchange, whatever. Because you have holding gains and losses in every part of the transaction. Now, so there you have it. You got your Bitcoin, you paid a fee, right? And now 4 months later, the thing closes. And now let's say Bitcoin is worth $4,000 because you're in the money. You went long on Bitcoin. Your original Bitcoin comes back to you, and your basis is $1,000 on that Bitcoin. And Kraken, let's imagine, is going to post on your ledger 0.5 Bitcoin, margin trade, date X. What my ledger does is I take margin trade activity that's in the positive, and I book it both as a revenue to you, and I look up the date of the margin trade and the closing value of Bitcoin on that date, and I have a historical ledger of the closing value of Bitcoin on all the days. And then I post it to you in US dollars next to the number of Bitcoins. Additionally, when I then take all of your stuff out into an asset class, I book it as an acquisition of Bitcoin, whereby you are establishing your basis. So, we're going to go through this because there's more steps to this big giant process, but in the case that you're saying to yourself, I'm using bitcoin.tax and it's not working, where it says margin trade and it has a positive number, you can type buy.
Okay. In the CSV, you mean?
In the CSV. You also have to know where they are and book them as taxable income to yourself if you're doing this by yourself.
I do not believe I'll be doing this myself.
Right. If you hire me to do it, I'm doing it for you.
Okay.
Right. So, at this point, you've taken your exchanges, you've made uniform formats for each exchange, Polo, Kraken, Coinbase, etc. You've taken all of your over-the-counter stuff, goods and services, mining, tips to people, gifts, and you've put them into a format that's the same, and then you pile the whole thing up into one giant ledger. Here we have it. Sort the ledger by all date. Now you have all these transactions. Then take all the Bitcoin transactions, split them out. So now we have Bitcoin buy, Bitcoin sell, Bitcoin buy in different exchanges because we're just going first in, first out, oldest to newest, right? Now, this whole thing has a bunch of feedback loops for me to find errors. The first error, when I format an exchange, I include deposits and withdrawals. Let's say that you take your Coinbase account and you deposit $100,000 US fiat into your Coinbase account and leave it. And then you just sit there and look at it, and then you withdraw. Your Coinbase account has gone up and down in value. Now let's say you do it for a foreign exchange. And you take $100,000 fiat and you put it into a foreign exchange and sit there, and then you pull it out. You have a foreign exchange reporting requirement. So I need to know, did you deposit anything into the exchanges? So now you have an exchange activity. If the exchange activity ever goes net negative, it cannot be right. That means that I've missed either a deposit into your exchange, or I've missed a purchase in your exchange, or I've missed a revenue in your exchange. For example, let's say you have a Coinbase account and it shows $10,000 fiat in, purchase 1 Bitcoin for $10,000, sale 1.5 Bitcoin. We got a problem now. Feedback loop number 1 is if your exchange balance takes any particular asset class into a negative, because you can't sell more than you have. So that's the first thing.
Unless you're shorting with margin.
Yeah, if you're shorting with the market, but if you're shorting the market, you're posting collateral. And that collateral still exists. And then it's going to give you margin trade with a negative number, which is to say a loss on a trade. But you still have to have had that in your exchange. And if you go beyond your actual holdings in the exchange, we're going to presumably see a deposit and then margin trade. Feedback number 1, does your exchange value go to negative? Also, doing this by exchange means that I get to market your holdings on foreign exchanges so that I can then forward that information to Alex who can get you into compliance with the tax law. Now, then we go to the big ledger. Here we have it. I take away deposits and withdrawals in the big ledger. The reason why is that deposits and withdrawals in the giant ledger are simply transfers between wallets and exchanges, one to another. So if you have Polo, Kraken, and Coinbase and no offline wallets, and you deposit US dollars into Coinbase, right? That's your opening bid, fine. You buy Bitcoin, then you withdraw Bitcoin and deposit into Polo. When I have it in the big ledger, my deposits need to equal my withdrawals insofar as they're denominated in cryptocurrency. So when you go to the big ledger, split out the deposits and withdrawals. Then you have a big ledger, split out each asset class by itself. Here's Bitcoin transactions. Here's Ethereum transactions. So now you have many spreadsheets. Here's a spreadsheet of Coinbase, spreadsheet of Gemini, etc. Here's a big giant ledger of all the transactions. And then here's Bitcoin transactions, buys and sells, buys and sells. Here's another sheet. Ethereum transactions, buys and sells, buys and sells. The reason this is important is because a future auditor can look and say, how do I know that your disposition ledger is correct? How do I know this is your real Bitcoin sale? And he can look and say, well, here's Polo, and here's the buys and sells in Polo. And then we can look at the big asset ledger and go, yep, here they are. They're all intermixed in between Gemini and Kraken, etc. And then he can look and see, yep, all these Bitcoin transactions in the big ledger are going into your actual Bitcoin ledger of purchases and sales. Feedback number 2. Yes.
We're almost at 2 hours here, so
Oh, is that right?
everyone's got to be like dying with this stuff. John knows this stuff. He obviously really worked here. So while you guys are all here, if you guys have questions, I want to just give you guys a chance. Any questions you have? Because at this point, I don't want to.
Sure. So this was just kind of why can't you do this? But like, if it's a property, why couldn't you just like incorporate some sort of company
in a foreign country and then,
Yeah.
You can, and they do. This is
Well,
why my
that-
friends are stuck in whatever fuck hell island they're living on.
Yeah, that or like even just like in the US, why wouldn't we be able to have that and then pay it out as like dividends or something like that? If you incorporate.
Let's imagine you have a company, right? Let's imagine you incorporate Crypto Holdings Corporation,
Right,
and then you buy stock in that corporation, $1,000,
yeah.
and then the corporation buys a Bitcoin and then something. Who's gonna do the accounting for the corporation?
I mean, you handle
The same guy.
yeah.
I've
that
done,
was gonna
yeah.
avoid your tax though.
It doesn't, yeah.
I wouldn't think that would avoid your tax, but like you'd have some advantages with like a corporation, right? Whereas like you could have dividends, and then if you are paying out dividends, that would be very different than.
But the corporation's still gonna pay tax on capital gains.
But if the tech company's incorporated in like an island, you wouldn't. You know what I mean? Like I have
But
friends.
you're still a US taxpayer.
So I have a friend who raised a ton of money on ICO. They incorporated in an island somewhere where they don't have to do whatever. I mean, would you only have to pay when you bring money back into the U.S. system?
That's a pretty complicated question. That's a way of saying I don't know the answer. But I know with the change to the tax code, this is an issue like all the really top tax attorneys are looking at, like figuring it out. In simple, what I would say is this: if you could just put your assets in a foreign corporation and avoid tax, when you open up your account at Ameritrade or wherever, it would say, "You're a customer. Would you like the add-on for $500 to have your Cayman Islands corporation?" You know what I mean? Like, a lot smarter people than me would know that stuff. So I don't think probably really practical for a smaller investor. What would I take?
Sorry, so it would only be beneficial if the corporate tax rate that you were paying on that revenue that you earned, plus whatever, I guess like, you pay it out to yourself as like dividends or something like that, it would only be beneficial if that mathematically worked out.
That, there was one, plus the compliance costs for all that, for setting it up. And then two is, when you're going offshore, there's kind of like, are you really going offshore in substance, right? Like, is there, like, for example, obviously everyone knows about like, all the tech companies putting their intangibles offshore, right? And there are ways to set that up, right?
Right.
But that's like, you go to like a PwC or Deloitte, you know what I mean? There's some of these international structures and firms. Is it possible? You probably could figure out a way to do it. I don't know. I mean, if you're sitting on like 15 million in crypto, like send me an email, I'll put you in contact with attorneys that can do that. You know what I mean? But if it's a couple $100,000, it probably wouldn't ultimately benefit you.
Yeah, I was just more curious about like a US, like obviously going
Puerto Rico.
offshores, but like US, I was just curious, like, I don't know, just because for the tax advantages of having like a corporation, I thought that there might be some sort of benefit. Compared to like
I don't know the answer. I can't tell you 100%.
Sure.
But I can tell you probably pretty unlikely that it would be a net positive. But it would depend on everyone's. Everything's different, right? And
Right,
things you're doing.
right.
I have some clients who are investing collaboratively, so they're putting together investment LLCs.
Right,
But they're still going to pay the tax, still going to pass through.
gotcha.
Any more questions? I mean, I got 2 hours of tax and crypto. I'm like, got higher
My main
horses.
question is like, I literally went as easy as possible. Like Coinbase, fiat, buy Bitcoin, transfer to Kraken, margin trade, lose all my money, transfer back a fraction of that to Coinbase and into my bank account. Is it worth talking to you guys to sort this out, or is the mine not going to be worth it cost-wise?
I don't know. That's a good. That's a good question. What we try to tell people is try bitcoin.tax, try cointracker.info. I mean, some people pay us because they have really complex situations or detailed past histories, right? And they really just aren't going to ever do it, right? It's almost like you're going to pay a painter to paint your house because you just don't have time to do it, right? Or it takes some technical detail, right? For people, I mean, some people, if it's not a big taxable, if you don't have a lot of money out there, and I don't want to tell you to spend as much as you lost.
That's fair.
Throughout, you know what I mean? Like, I wouldn't want to do that. I don't want to pay taxes.
Those turbo, I mean, they just really choke on the margin, right? Is there a way to
You
maybe?
said flip it. You had a key for this. You said go into my CSV for margin, for Kraken, flip where it says margin trade to buy, and then book that as
So,
both income, or sorry, yeah.
so here's how it
income.
goes in my ledger, right?
Okay.
So, in my ledger, it's listed as revenue, right? Because there's only one side to it, there's no disposition. So, let's imagine that you went long on Bitcoin and you earned 0.5 Bitcoin on a future swap. In my ledger, it's gonna say revenue 0.5 Bitcoin, date of the transaction, and the value of the Bitcoin per unit at that time. So then, when I sort my giant ledger, I sort, all right, what's all the revenues for 2017? Highlight it down, the USD value, and then I send it to Alex, and I go, hey, the revenues for 2017 were X. The fees for 2017 were Y, etc. Right? But then, when I go into the Bitcoin buys and sells ledgers, I flip from revenue to the word buy. Because in a way, you have bought that Bitcoin with your tax liability. Now, it's not as simple as just going into Kraken, sorting for margin trade and typing buy and sell, and then loading. You're going to get an error. And the reason is that bitcoin.tax is looking at your Kraken ledger, and it's expecting a format, and it's not expecting those words in those cells. But what you can do with bitcoin.tax is upload a manual CSV that you have built. I've done this for a client where he had a bitcoin.tax account and he couldn't figure out how to get the 2011 stuff in there. There was 13 trades, it took an hour. Just built it up, looked at his bank accounts, okay, put a little notes, this is the bank account line in this thing, loaded it into him, done. If you're building your own thing, bitcoin.tax has a model for you that says if you're going to load a CSV of trades, here's what we want to see. Column 1 is this, date, or whatever it is. Column 2 is this, column 3 is this. What you can do is exclude your margin trade activity in your Kraken account, take those out of your ledger, set them aside, only load crypto to crypto in your Kraken ledger, and then format your margin trade activity according to the manual upload in bitcoin.tax. This is not easy to do. I do it for a living. And it's possible it is prone for error. And should you get audited, an auditor will want to know, how can I prove that this is correct? In my system, you can see the thing walking its way into the ledger, fine. But if you're dealing with an amount of money that you feel comfortable just shooting from the hip and going with it, split out your margin activity, load the trades according to the Kraken format, and then do a manual format for your margin activity, listing them as buys and sells on that given day. Does that make sense?
Does.
Is that a fair shortcut for you to try?
I think, are we still recording?
Yeah, we can have like a voice modulator.
What do you mean that I can?
I think I'm just gonna.
So what's the output from you guys?
Right, so this is a great question. What's our product, right? At the end of our service, in the first place you have a tax lawyer, and I don't work for you, I work for Alex. And that means that a CPA who gets no attorney-client privilege, it doesn't exist for CPAs, because I don't work for you, I work for Alex. Our communication, because we are involving Alex, is attorney-client privileged. That's step one. So you have a little umbrella. The second thing is, at the end of our services, you're going to get a letter from me to your future auditor. And it says, this is every step that I took to build this cryptocurrency activity into a tax format. That way, if I walk out and get hit by a bus and get killed by the 21 Hays, then at that point, the auditor doesn't need to talk to me, because he can look and say, all right, step one, John went to Gemini. Okay, Gemini. John formatted Gemini into a uniform format. Oh yeah, here's the raw file and here's his formatted file. Yep, those are. John collated these into one big giant ledger. Oh, here's the ledger. Okay, looks at it. Okay, great. Then John split out all the Bitcoin stuff. Okay, here's all the Bitcoin stuff. Yep, here they all are. I can tie them all back together. And then John calculated on a first in, first out basis, right? So that letter will lead your auditor through my activity so that I am in the first place showing to the auditor, this is our reasonable approach that we applied uniformly. And I discuss any assumptions that we had to make, any gaps in the record, any things where we know that something happened but we don't have a perfect accounting of it, any over-the-counter transactions. But then also it tells, how did I get these numbers? I will also give you ledgers of each type of cryptocurrency both the short and long-term gains and losses, as well as your remaining balance. So it'll say at the end of 2017, these Bitcoins were remaining, they were bought on these various dates for this much US dollars. So that then you can look at it and say, if I sold my entire Bitcoin's position, this is my basis, this is the market value, that's my gains. You'll also be then having a consultation with Alex and I, where Alex will look at my numbers and give you tax consequences to the numbers.
And you won't take like consulting work just to jam my crap in the ledger. Because I
You know,
I'm
honestly,
super simple.
honestly, I mean, I guess, I mean, for anybody here, if you guys need a little bit of time, a little help, we're happy to kind of help after April 15th, because right now we are like,
I was gonna file an
file an
extension anyway,
extension, and then give us a call, we'll work with you, we're not trying, trust me,
One thing that I've done for people before is a guy, he had his own stuff, he was getting ready to do it. I did the first 3 lines of his
I'm
spreadsheet
fine
for
with
him.
that too, man.
Yeah.
I can
I went to his living room, I did the first 3 lines, and I showed him, I was like, does this make sense to you? And he went, yeah. He did it, and then he said, hey, I'm done with it, can I send it to you? He sent it to me, I looked at it, yeah, it's good. Totally fine. You know, we're here for the people. It would be really crappy of us to be like, nah, you either get all of it. Yeah.
You know, I'll pay. Your effective hourly wage would be astronomical, but like, I just need someone to do that atomic
Sure,
things
sure.
that I can do there, you know?
Yeah. Yeah, I mean, that's easy for us to do, and if you're willing to do the work, yeah, I can get you started.
I can
And I'm happy
put-
to also give you the infrastructure, right? Because like I have lookup ledgers on so many cryptocurrencies, I'll just send them to you. Because you can get it for yourself anyway, but for what? For like 5 hours of digging through the internet, I've already done it. And it's just, I'll email it to you. But I want people to be able to do this as much as they can, because when they're buying our services, they're retaining a tax attorney who has a CPA. It's a lot, but people need to be able to do this. So yeah, just shoot me.
Like I
an
started
It's
December-
worth it if you
I
can
started
afford
December
it.
something
Yeah.
with this guy, so I only have like a very tiny amount last year. Like this year, I've got like millions traded, and I'm gonna probably need for next year. But like,
Sure.
I just need to get last year's taxes done with.
Well, cool, well, thanks guys. Really
Thanks,
appreciate it.
guys. Thank you.
Oh, I'm gonna build.